Hello, everyone. This is Travis the Trader coming back to you live on Tuesday. This is, October the 8th. One of the videos that I had uploaded a while ago was best way to get exposure to crude oil. One of the ways to go about doing that was either the crude oil futures, that's /CL. You could also trade the micro crude oil futures, that's /MCL. But then there's another way, and this is not forward slash, this is XLE. XLE is the energy, oil and gas energy ETF that has stocks where their holdings consist of ExxonMobil, Chevron, British Petroleum. For those of you who have who know what some of those holdings are and how they're weighted in that specific ETF, love to get your thoughts, love to get your ideas. XLE, it is different than the futures. XLE in this case, you do have, I guess, if you have calls, you could have potential dividend risk. You don't have to worry about earnings, which I guess is a good thing. And again, if at some point in time, if you are in the money and you get assigned, you could get assigned stock, or you would have to go out into the market on the call side to buy stock and then deliver it to whomever it was on the opposite side who had exercised those calls. You don't get that on the future side. Those are all cash settled. This is not. But I decided to try something new with XLE. I have traded it before. I figured with all the stuff that's happening in the world, and again, as I mentioned before, I don't really read the papers as much as I probably should. I'm just looking at price. I'm looking at volatility. I want to see what the liquidity, what the volume is like in the underlying. And so what I decided to do with XLE, with everything that's been happening in the world, and I really didn't have a bullish or bearish side, so I decided to sell a strangle. I sold the 85-103 strangle in November, so that's 38 days to expiration. And right now it's doing okay. It's in between. Need a little bit of a vol crush. I just need this thing to trade within the 85-103 margin. It is, I would say it does tend to move with crude oil, or it can. But again, because you have so many different companies, and those companies may have all sorts of issues, management issues, operational issues, etc., it may not be 100% correlated with crude oil, with the crude oil futures. So just keeping that in mind. So as I said, I decided to just take a strangle, 85-103 right now, 85-103 strangle. I say right now because if I might at some point, I may have to recenter those strikes. But look, it's just a way of getting that exposure to the oil markets, to the energy markets. And again, let's see what happens. Let's see what happens. Again, a lot of people are saying this is going to happen in the Middle East, or this is going to happen. No one really knows, or no one, if it does happen, who knows when it's going to happen. So that's why I kept it as a strangle. I kept it as a delta neutral, or as close to a delta neutral trade as I can. And let's see how it happens. And of course, I will keep everyone posted as to how this trade moves forward. For those of you that did find value in this, please subscribe to my channel. Thumbs up is always helpful. I do look forward to putting out future content, but do like to hear from everyone, as well as having some kind of favorability with the algo gods of YouTube. And of course, I look forward to seeing everyone in the next video.